All right. Well, today we're going to talk about real estate in the IRA and 401k. And we've got somebody here who's got 36 years of experience, 4,000 transactions. He's done everything from trade ups to luxury, residential, commercial. He's the host of his own radio show. So I'm a little nervous, because I got a professional on the other side of this screen here. But I'd like you to welcome Craig Lerch. Craig.
Thanks, Joe. This is a privilege. People say, why do you do things? And I focus every day on three things: changing lives, making money, and having fun. And changing lives is sharing ideas. When you were on the radio show, you did a fantastic job and really opened
Ooh.
my eyes up to what you guys do, which is fantastic stuff. And I pretty much quote you guys every week on the radio show, which is on Wednesdays,
Thank you.
10:30 to 11, if anybody wants to hear it on 860 AM, WWDB 860 Talk Radio AM, or you can always find us on the podcast. Ours is on there, the one with you and I. You can always follow me on YouTube also, Craig Lerch Selling 215, and that has that stuff in there. But we always talk about camera plan, and it was like, oof. I mean, I've been doing this for a long time. I've dealt with 1031 exchanges. I've dealt with all kinds of things. And 20 years ago, I heard about this. And I actually tried to get involved with it. And then when, we crossed paths over a year or so ago, I was like, you guys nailed it. But $2 billion of business you guys manage, you're a big dog. You guys are very, very successful in what you do. So I'm privileged to be here with you.
Well, thank you. No, that it took 20 years to get there, and the founders worked very, very hard, and they've got good people. So, we feel blessed and lucky to have, that as many clients as we do. Let's dive in. Okay.
Yeah.
A lot of people, there's a huge buffet of options when it comes to real estate. And it's not just rental property, single family home or multifamily. We have somebody on next week that's going to talk about marinas and rehabbing marinas and getting those up as income producing properties, similar to the way people have turned RV parks and self-storage facilities into income generating investment opportunities. How do you focus? I mean, let's talk about matching, these options, all the different real estate options to the risk profiles or the abilities or the strengths or the investment objectives of the investor.
When it comes down to real estate, the average real estate agent in the world sells 3.6 houses in a year. 3.6 or 3.6 properties. You have residential, you have commercial. Like you had mentioned, I've been doing this 36 years. I'm an SOB. I'm a son of a broker, so I was born in the business. And I've evolved through it of starting with residential, going into luxury, and still doing residential, but yet also doing investments, one for myself. Two is because my client base asked me. And the biggest thing in buying real estate is having, and you had said it earlier, consult your lawyer, consult your accountant, you guys to keep you out of trouble with the IRS and make sure things are right, is trust and relationship. Knowledge can be kind of found, but it's also innate from the street. You can have all the book knowledge you want, but if you don't know the street, and if you don't know the animal that you're playing with, or that person has the expertise in it, that's where the challenge comes in. That's when the uh-ohs happen. So everybody, like we're all one of a kind. We all have our own DNA. So we're our own special diamond of who we are, have our own opinion and understand our risks of what we want to do. And if you're going to dive into this, you're going to want to sit with your financial advisor in whatever realm they do. A lot of them want you to stay in the stocks and all that stuff, but diversity is the key of where you want to have. And real estate's the biggest way to build wealth. And the way to do it, especially with what you guys are doing, is building the wealth and holding it and compounding it without the taxations. In some of the ways, it's phenomenal how you guys are able to do this. And I'm telling all my clients about it because it's really unique how you can be in different parts of the country. And again, I don't know where everybody's coming from on the webinar. Joe, is everybody mainly in the Philly area, wherever, but wherever you
nationwide,
wherever you're at, I have team partners that are there if you're interested in learning more about your marketplace. But here's the key. I'm talking about the Philly market and around it right now. For people to come in and invest in our area, we have a ton of people coming in here. It's the 5th highest rated city with Zillow as far as growth. We have great rental stuff in the city. There's a lot of new rules, so you got to be really good with that with a rental manager. And in the suburbs, you've got a lot of colleges, a lot of growth, and things of that nature. We have a lot of Airbnbs that are taking place. They do need to be licensed, but the key is that what we have in Philly is different than you might have in New York or somewhere else. I have a lot of New York and Connecticut clients that are coming here and buying real estate, not with their 401, just with regular money, because their return on their investment's better. They might be used to getting 2%. You might be interested in getting, some place you get 2% interest or 2% return on your investment after some of it's just break even. In Philly, you can actually get anywhere from a 6 to a 9%, maybe 10%. And on some situations with short-term loans also that we were talking about, people using their 401ks of investors that are looking for alternative financing also, they could be as 10 to 15% for some of these guys. Seasoned, not the brand new DIY guy or lady in there just watching TV. I'm talking seasoned people that are out doing buys, flips, rehabs, or they'll do the work and then they'll refinance it out.
Gotcha.
So just as some ideas, what some people look like.
I'm sure the Philly Chamber of Commerce appreciated that commercial for the greater Philly area as an investment destination. So those of you around the nation, come visit,
Philadelphia is the only
invest,
place
right?
that's, remember, everywhere that you're coming from today is from here. This is where the Constitution was signed. This is where the 13 colonies were broke off from Britain. And we're celebrating the 250th anniversary coming up.
What about some of these? I know you've done commercial and residential and all points in between. Some of the markets you look at, like self-storage, you see one about every mile as you're driving around the city. Some of these other markets that appear to be maybe risky, maybe overdone. How do you look at these things?
The self-storage, we've got a lot in the area. The challenge is in the area where we're at, the ground's so expensive. So to put that in there, it's tough. We've actually had a big influx of industrial ground get changed into downgraded residential ground or apartment ground. Because some of the industrial zones, they're not building, they're the big warehouses and things of that nature. So they're taking some of the older warehouses and converting them to like cube space and things of that nature.
I've seen it. Yeah.
But there's not a lot of the sprawling ground, I'll be honest with you, unless you're going farther out, maybe, an hour and a half or an hour out of the city that has that ground to do it. But again, your return on your investment is going to be different.
Yeah, we see the same thing with land preparation for single family home building. There's a group here in Philly that does it, but the tracts of land available are smaller than what you would see with the guys that are doing it in Texas. So,
exactly.
Consult your local, conditions and find people in your, in the real estate industry, in your local market who really know what's going on the ground. Great places to do that are real estate investment association groups. I mean, go there to get a feel for this and talk to the people who are in the business. They've seen it all and they made all the mistakes, so you don't have to.
And email me. I mean, if you're looking for a real estate professional in your city, email me, call me, reach out to Joe. I will find you somebody who's qualified, or at least I'll get you a couple people that you can talk to know that we've done the first part of vetting. And that's the key, that first level of vetting versus just picking a phone up and asking, that's where that trusted part comes from.
Well, yeah, Craig's part of a nationwide organization, eXp Realty, and they've got professionals and specialists in every market in the country. So, use him as a Sherpa to, to get oriented and get in touch with the right people for you in your particular market. Particularly newbies, one of the biggest questions I get is, where do I find deals? And how do I find deals? Yeah. And I tell them to go to the RIAs and I tell them to go network around. Networking is the best way to find things and to build relationships of people that you want to do business with. How do you find stuff? I mean, you don't wait till it's on the listing services and things like that. How do you keep your nose to the ground?
Well, you and I talked about this, the other day, and I always have people, everybody's looking for the home run. Everybody wants that one home run. Well, guess what? I got bad news for you. You're never going to find the one home run. It's like seeing a white deer, an albino deer. And I have one in my backyard, and we talked about it.
You got to get a picture of that.
30,000. And if you're a golfer, it's like hitting an albatross, which is a 2 on a par 5 or a hole in 1 on a par 4. So it's 3 under or a double eagle. So those home runs, stop looking at that. What I look at is, or the grand slam, you want to look at the doubles, the triples that can turn into something greater. Because if you're always swinging for that fence, I know Babe Ruth struck out a lot, but also had the home runs, you're going to get few and far in between because you're going to limit yourself on opportunity. It's like if you say yes to people all the time, you're not going to have space in your calendar to fit the things you really need to do in there. So you got to learn to say no to some investments that aren't right and wait for the right ones. And again, there is no perfect one. There is no perfect grand slam. We gave up the crystal ball. We gave up, I call this the snow globe. Most people live in the mindset of this snow globe. I want to play exactly where it's safe. And in real estate, you have an appreciation, you have a return on investment, and you also have, if you have debt on it, which you guys can help with non-recourse, you're building equity by having somebody else pay for it. So you're leveraging that. And that's what the great part about real estate is. You have three wheels of it. You have the return, you have the debt pay down, and then you also have the growth and appreciation that's out there. There are multiple different ways of buying real estate. There's places in areas around colleges that you can buy single family houses, and you might have $400,000 or $500,000, $300,000, $400,000. And I can tell you in our marketplace, $300,000, $350,000, you're going to be able to rent that place for $3,000 a month. And if you have it outlined and your taxes are $5,600 or $6,000, you're going to make good money on it, and it's going to rent out to college student or not college students or single family, a single person or somebody who's going to a residence. So you can buy a single family house for some of those rentals. Some people like multifamilies, which is 2 to 4 units. And then somebody like the complex. Remember, the bigger the animal, the bigger the headache. That's where you really need to start seeing if you have the stomach for it.
That's big because if you get into, some people like the toilets, taxes, tenants, and trash, and they like being landlords, and they're capable. They like problem solving. They like interacting and serving tenants. Others prefer the passive. They'll invest in a deal. They'll lend money to a fix and flipper. So you need to get your, what was it Clint Eastwood said in that movie? A man's got to know his limitations, and a woman has to know her limitations too. Is that you get to get a good feel for what your capacity for risk is and what your skill set is coming into this.
One of the other things is there's different properties. When you're looking at, you just said the toilets, the taxes, the tenants, and the trash. When you're looking at properties, there's single family who's dealing with a residential tenant. And then there's small warehouses. It can be anywhere from $400,000 to $1 million that contractors are looking to rent. And they're not triple net lease. They're still gross leases, but at the same time, they're bringing in non-emotional stuff. These people are typically not going to be moving their businesses once they're getting established, unless they outgrow it. And that means there's usually somebody there. You're going to have less wear and tear. You're going to have less turnover, things of that nature. And then there's the shopping center where you're going to have the commercial, which if you're really getting big, we've put syndications together of different groups of people, 3, 4, 5 investors into it, and all of them can fund it differently. Some person might be doing cash. Somebody else might be using your 401k through your CAMA plan here. Somebody else might be turning into a 1031. You might decide you want to be the financing behind a warehouse that somebody else is buying and putting 20% down. That's $1 million or so. A couple people might decide in this organization, look, I'm going to put up 200, 253, whatever that number is. And I know I'm getting a fixed return on my investment, but it's in one of those buildings backed up by a mortgage for somebody that owns that. So there's all kinds of alternatives of property to buy.
We've got a question. Do you mind taking questions as we go along? Yeah, Steve is asking, he says he has some investments with companies who, number one, deal with mortgage acquisition and refurbishment, and 2, investment companies who are into mortgage lending for large apartment complexes. Are you seeing trends in these 2 environments since unemployment and inflation are influencing the market? Hey, that's a good question.
Yeah, what I'm seeing is, I know that you've got a lot of people are looking for risk management. I think this is where the question was going. Like, what you're doing is great if you don't want to deal with the one-on-one. It's also like buying into some of the Delaware statutory trusts. If you're doing a 1031 and you can't find a place to bank it, you can park it in there for a 4-year term and then pull it back out, and it still holds the status and things of that nature. So what I'm finding is that, yes, institutions are looking for more money and are putting money out like this. I know that a lot of banks you're having less DIY work or less contractors buying, because the banks that are liquidating foreclosure properties are now making or having the work done themselves so they could capitalize on the growth.
Interesting.
So that's where that investors, where there's less investments out there or less properties for people to get, because the banks are putting them out there finished. 78% of the buyers in the marketplace today, whether it's investment, don't want the headache. I have X amount of dollars. What's my return on the investment, or what's my monthly payment? They don't want to be writing checks. They don't want to be managing work being done. They don't see it. They don't get it. 20% do. So I'm not sure whether did that answer your question, Steve? You can make a comment down below.
Yeah. Yeah, Steve, hopefully that did. Yeah, alternative to stock market, as I feel the Dow may be ready for a free fall. No kidding.
Again, I buy real estate. I own stock in EXPs in our company here. I have some other diversities, and but mainly my stuff's in real estate. I buy into it, and I can tell you one thing, that I'm moving my 401k stuff. I'm planning into this year and getting some stuff over here to Camel Plan. That's where I'm going to put some stuff on top of it that I can use and manage it.
Yeah, that's the thing about, I'm talking to a group of people who are into options trading on Saturday and all sorts of stuff with the stock market. And my main, the thrust of my message is that this is an alternative to what's going on over there. And we notice that when things get jittery on Wall Street, we see a little bit more activity in terms of, hey, tell me more about this. I might need to have something that's, it doesn't correlate with the markets, at some point. So Steve is asking, who is EXP? Well, I'll let you give your commercial for EXP.
EXP is just a national real estate company. It's a cloud-based company. It's got over 90,000 agents around the United States. It's the largest transactional real estate company. It's sold over 350, I think it was 350,500 and some odd homes last year. The number one in transactions. Different ones boast about volume. But like I said, I had my own company for 17 years. I was in my family company 15. I've been with EXP 4 years because it's a company that I can be in multiple states and be licensed and be from. They actually trade. It's EXP World Holdings. So you can look at them on NASDAQ.
Okay.
And it's really the only agency that is not Snow Globe, which means it's franchised. EXP is owned by the agents, owned by the stock market, can't be sold, and a cloud base. And that's where it comes from. High technology, high client service. So.
Great, Steve. Hopefully that answered your question. Let's get into the do's and don'ts, and you may have some anecdotes of deals that somehow came together despite the odds. And what do you look for? What should you do? What shouldn't you do? That sort of thing. Talk about some deals that you've been involved in that were unusual, and what you learned from them.
Number one rule: if you're going to buy diamonds from a diamond guy, not a plumber who has an option on the side. I have buddies that are plumbers. They make a ton of money. They use diamond guys to buy diamonds. You're going to buy real estate with guys that know what they're doing, have owned real estate, that have done it. Not your cousin, your aunt, your sister, your brother, your friend who has no idea. I always say to people, unless you own it, you don't understand it. You shouldn't be selling it unless you own it. It's hard because a lot of real estate agents do not even own their own home. They rent their home, and that's where it's at. So one is look for your expertise. It's dealing with people that aren't there. Alan Dom, who is probably developed hundreds of billions of dollars around Rittenhouse, which we call the beachfront, one of the main key properties of luxury properties in the city of Philadelphia, in Rittenhouse Square. Has a great saying from his father, God bless his soul. He says, "We grow old too fast and wise too late." We grow old too fast and wise too late, which means that when you look at something, look at it like a beachfront, look at it like a lakefront, look at it like a limited piece of property. And then how far are you getting away from that central zone? And how is it affecting? if you're way out there or you're in a Blythe area, no wonder it's expensive. But what is the game plan for there? Do your homework and where you want to come. Don't speculate unless you're willing to lose the money. It's like gambling at that point. All right. The mob, the funniest thing is, and so do the casinos, they're constantly hedging. They're always making 10% on their money. At least there's always a 10% spread. So know where you're investing and know who you're investing with, and do that homework first. That's a number one. Do not do. Do not knee jerk. Do not do it emotionally. Do it sheerly for numbers when you're investing. It's not a place you're going to live. Living somewhere is one thing. Investment is another thing.
Good
That's
point.
number one. Do not do.
Okay. What would be number 2 or 3?
Number
Put
2
you on
or
the
3.
spot.
Number 2 is looking for the home run all the time, and number 3 is
all right.
over investing where you can't play. Putting your neck out there. Yes, put your neck out, but understand that you're not able to liquidate these things as quickly as other things.
Right.
And that's a key point. Know your limits. Know your sandbox, know where you want to go, and things like that. There's some fantastic opportunities, and opportunities come up. Like I was telling you one the other day, as one person loses an opportunity, another person might pick it up. I actually sold a building. It's 25,000 square foot, has 2 tenants in it. Phase 1 clear, which means that there's no environmentals on it. It was originally built by the owner that built this industrial little center, little cul-de-sac. His company was in there. He sold the company, retained the building. Now he's getting ready to sell the property and put it into his retirement portfolio and things of that nature. But the difference is we had a buyer that was buying it. So it's all clear, had all the inspections, negotiated down, and it's throwing a beautiful, and the price is $1.6 million.
Wow.
Okay. Net, it was somewhere around a 7.5 to 8% return. That was with debt service on putting 225% down. So theoretically, if you had $400,000, $450,000, you could put it down. You're going to get an 8% return after all expenses, and then you still had your debt service, which was at about a 7.5% rate. Fantastic building. That guy's deal blew out because he was doing it in a 1031. His buyer blew out. So his was the deal was contingent upon his 1031. So there's an example of saying you're looking for a home run or something in the right place at the right time. That's a building that if I had names of people, and I do, I'm taking this building out to other people now saying, look, it's been phased 1. It's already been paid for. I have it. I got this. It's been appraised. It's good. Are you interested? That's something that, as you were saying, a building that is doing the homework for. We can always build. I have a list of A, B, and C buyers looking for different things. And then I just go through them and say, hey, look at an opportunity. You interested or not? Yes, no, yes, no, no, yes, and go from there. So goal is to figure out where you want to be, what you're kind of looking for, and then get on a list and go from there. So I'm the one that's out, I'll say, raking the leaves, skimming through the muddy pond, finding this stuff, and then coming saying, hey, by the way, I found something. Is anybody interested?
Yeah, those of you sitting in, there's the Sherpa right there. So when you say where do I find deals, find people who are out finding deals.
Yeah.
So that's great. Let's talk a bit about, because we're heading into the home stretch here of our half hour. Let's talk about why you would do this stuff inside of an IRA or a 401k. We do this all the time. We take an investment proposition and we put it inside of an IRA and outside of an IRA, and we compare the returns. And generally, you can expect a 25 to 30% and even more boost in the return you're going to get if you're doing this inside of an IRA. And that's just the beginning of what you can do. If you have a tax-free Roth IRA, you won't pay any capital gains tax. You'll pay no taxes at all on the income you generate in there. So this is why you would want to do that. We compare it all the time. So if you have something that you're looking at and you want to compare it, we have a model we can plug it into. Craig, you want to talk a bit about people that you've worked with who are using IRAs and 401ks?
I actually have a few guys that sold their companies. They've taken their money and they funded their 401ks. And now what they're doing is they're funding investments for other investors or other friends of theirs. Remember, you can't do your own, right? That's the rule. So
Right.
one guy's sharing with another one's doing another person. So I'm running into a lot of guys that are a lot of sellers of other companies that are liquidating, and they're putting money away because they've got to take that tax and put it away, mainly so they're not paying it all to the government.
Mm-hmm.
And that's what they're doing. They're using those investments. They're diversifying.
Right.
And also leaving it for longevity of the family that's out there. You have a lot of state managers and financial people and lawyers that are suggesting to do some of these investments in different ways.
Yeah,
So,
we have a session that we do on distribution strategies and legacy strategies for IRAs, and those of you who attend here are already on the list. You'll be notified when we're doing them. But those are great sessions to sit in and talk about what you can leave behind and how best to do it. The steps to doing it are pretty simple. Those of you who do not have a self-directed IRA or 401k, I like to say it's 3 steps. It's opening the account, funding it, and then making an investment. And we help you every step of the way. We work with Craig and his clients. And if you need hand holding or you need to get on a call with us, we'll help you open the account, then we'll help move funds from other institutions into your account. And then we work with Craig and the people that he connects you with to close on your real estate investments. So it's a pretty straightforward. We have tutorials at the website. If you want to take a look at that, there's a great little animation that does in 5 minutes what I go out on to real estate meetings and do in a half hour. So it'll save you some time and
love
save you some
I saw that.
gas. So take a look at those. Craig, any other advice as Sherpa?
There are no silly questions. There are no silly questions. That's the point. Ask. The point is if you're in curiosity, great. Living in judgment is over there. That life's too short to be in judgment. Live in curiosity. Get curious. It may not work for you, but it might work for a friend. It might work for a relative. It might work for somebody else. And again, if we can supply you with information to make smart decisions for yourself, and then you can say, aha, and maybe here's somebody else that we can help. We'd love to help them. Don't just limit it to yourself. If you've heard something that's interesting here today, stay curious with it. We'll talk. We can talk some more about it. You can reach out to me, reach out to Joe. But again, if you have any other family that needs help, please, we're here to help.
That's a great point about other people, because a lot of people starting out, they'll say, hey, I don't have much money. And we have a little booklet at the website. It's called 20 Ways to Fund Your Next Real Estate Investment. And you can pair up your IRA or 401k money with non-IRA and non-401k money, your own, and you can partner. You can partner with other people that have IRA and 401k funding. For those getting started, the Friends and Family Network is generally where you go when you don't have enough scratch to get started. And a lot of those folks may not have 20, 30, 50, $100,000 laying around doing nothing, but they might have a 401k, in a job they left 10 or 15 years ago. So, this is something to consider. Use other people, bring other people into your network, and do business. So,
And I want to throw some real key here. Building wealth, some of us, as you get older, it doesn't compound as quickly. I have a 29, a 27, and a 23-year-old daughter. I have 2 boys and a daughter. I told them, guys, you're going to put so much in your 401k. You're going to start moving some to Camera Plan. You're going to put some over there. And then what we're going to do is get some of your friends, and we're going to start buying buildings with your friends in the 401ks that nobody's kind of in charge. Somebody else is managing, and it's going to parlay in time. Could you imagine if you took something like this back when you were in your 20s and where it would be today? You can hold mortgages, you can hold notes, you can do everything. So think about not just yourself. Think of how you can help your grandchildren, your children, your mindset, yourself. But that's the key. That it's that compound that if you're younger in this, fantastic. If you're older in this, we can find things to protect you and make better returns. But again, just giving you an idea there.
absolutely.
This is not limited to getting ready to retire. This is limited to who do you know starting now, and let's get get the ball rolling, and the snowball get bigger. So
Yeah, there was a presentation I attended last night, and he had one of those compounding schedules up there, and it had a modest income, a middle income, and a higher income example. And even the modest income saving 10%, per year, religiously throughout the working life led to, a significant amount of savings for retirement. Um, Jim is asking, he says he thinks he's too old at 68 to invest in real estate and receive benefits of cash flow. Am I wrong in this thought? It's a common thought. I'm in your age bracket, Jim. So I'm looking for income opportunities. And yes, you can put your money to work to generate income and get it. It's not a time horizon that's going to take 5 years or 7 years for it to come back to you. You can go buy a mortgage note. You can lend money to a fix and flip person. There's any number of ways you can get involved passively that immediately puts your money to work and generates cash flow. So there's lots of ways. Jim, give me a call. I'll walk you through it, and we'll get some examples, and we'll look at what you got to work with and see if we can help you.
Yeah.
I think it's 12:31, so I think the clock is the bell is tolling for us here. Craig, thank you so much. Good stuff. You're always fun to be with. You're always high energy. I love it. I just like hanging out with you.
Yeah.
Thanks for coming in and sitting with our audience. We appreciate it. We know you're busy. And thank you.
Pleasure.
Yeah,
Anybody
thanks to the
need me,
audience.
you know how to get me, reach out to Joe. Be more than happy. Schedule a call in.
Right. And
Sure.
thanks everyone for sitting in during your lunch break. Take care now.
Have a great one.
All
Be
right.
well.
Bye-bye.